Yes.
Haven't had
Hi,
you on in a little
everybody.
while.
Yeah, it's been a minute since we've been on. I'm Michelle Denise with Tycor Title, and we have Carrie Haynes today here. She's part of our management team and our guru on this fun subject we got going here. But I wanted to just go back to what Andrew, you having Andrew in here and having us on. We're all as resources. Travis is bringing us on as resources to all of you, to help you be educated and be prepared when you're going up against, other agents out there, making sure that your arsenal is fully loaded. And what we're here as Tycor, I just want to reiterate, when it comes to farming and marketing, you guys, it's a new ball game. It's not like, oh, here's a farm and go mail it, you guys. It's next level, and I can go into some great detail, and maybe Travis will have us back on at a different time on just how in depth we can get when it comes to targeting a specific geo farm. So, and like I said, none of us are happy unless we're getting lots of deals coming through the door, right? So we've
Yeah.
gotten pretty creative with some of that stuff, and we're here as a resource for you guys on that. And I'll make sure to put my info, and I think Travis has got our stuff in the back as well. But Carrie, you want to take it away with some fun fencing, uh, exciting topic for everybody? Uh-oh, you're on mute.
Uh,
You're on mute. You're on mute. Carrie, you're on mute.
Hold on. Here I
there
am.
she
There
is.
you go.
So I'm Carrie Haynes. I'm the escrow administrator for Tycor Title San Diego County. And FinCEN has been my world for the last probably 6 months. Um, Hoping they were going to extend it again, but my hopes died on Monday of last week. Um, as it relates to real estate agents, I've heard a lot of things out there, and some agents are fully versed on the rules here, and some are just completely in the dark about what it is, and that the contracts even print out a FinCEN addendum. And so I just want to make sure you guys are all aware that your contract package has a FinCEN addendum attached in there, and it's kind of buried a little deep on some of the packages, but every transaction should be alerted to the new rule regarding FinCEN. This isn't a new rule necessarily to us in San Diego County. We've all been dealing with the old rule, which was the geographic targeting order. Now that rule has become a nationwide rule. It's now the real estate reporting, RRE is what they're calling it. So every transaction that is considered all cash, and I'll get into the definition of all cash in a second, but every transaction that's all cash that involves an entity buyer is subject to the real estate reporting now. So there's no threshold of $300,000 or more. There's no identifying in a specific county of California. It's every county in California, every state across the nation. So we're all in the boat together. We just happen to have a jump start because the reporting is going to be very similar to what your buyers already had to report when they were qualified for a FinCEN transaction. So, um, so entity buyers should be like your biggest clue that this might be something that they have to do. What I don't like about the new rule is that they have added back into the entity definition family trusts. So in the very beginning of the old ruling, family trusts were there, and then they quickly got rid of the family trust definition, and they became exempt. But right now, your buyers who are buying in their family trust are now subject to FinCEN, not just your LLCs, your general partnerships, your corporations. It is involving your family trust buyers also. And those are a little tricky because those parties don't really understand all the rules like regular entities do. So they're a little frustrated about the collection and why you have to collect and all of that. So it makes it a little bit challenging. But just want to put it out there. They're now part of it. I am praying to the gods that they get rid of that one also. But we'll see as it goes down the line. An all cash transaction will be typical all cash if there's no financing whatsoever. But an all cash definition is also a seller carryback that would be considered all cash and be subject to FinCEN. And actually, it's not all cash. The rule says a non-financed transaction by an institutional lender. So your B of A's, your Chase, your guaranteed rate, those all fall under institutional lending. But some of your hard money lenders, even though they're big hard money lenders, ARV Finance down here in San Diego is really big. They fall under non-financed. I can't say this name. I think it's Kiavi Funding. They're considered non-financed. However, a non-financed company may still be subject to the anti-money laundering programs that are required. So there's a way to exempt them. You're going to have to work really closely with your settlement agents because they have the ability to reach out to those lenders, get their confirmation that they already have a program in place, which would then exempt the transaction from reporting as well. So it's just a little convoluted. It's very tricky. So you're going to just need to keep in close tabs with your settlement officers. There is the old rule also required that the title company was responsible for the reporting of the FinCEN reports. That rule changed as well, and it became your settlement agent who became the number one in the hierarchy of the waterfall of reporters. So your escrow officer is going to be key in understanding that he's in charge of the responsibility to report and then decide what is best for their company on how that looks. The rule does allow them to designate a different party to report for them, but they need to work closely with whoever they choose to designate it out to. So settlement agents need to be on board. So I would be making sure when you're having conversations with them, do they have FinCEN in place? How are they going to be doing it? Are they going to be firsthand doing it themselves? Are they going to be assigning it off to someone else? Because that brings into the mix another party that maybe your buyers and sellers are not aware of. Oftentimes your buyers and sellers never speak to your title company. They only speak to the settlement agent. So when the escrow officer hands off that responsibility to a title company, which is what some of them are doing, and we're gladly doing it for them, your buyers and sellers don't know who we are, so it gets a little confusing, a little bit messy. So it's real important to know all the layers that are happening. The report itself is very similar. The buyers have to give us the same information they gave us before, names of their entity, who are the signers or the owners, of the actual entity itself. We do have to collect their social security numbers, their date of birth, their physical addresses. And then we also have to, new to the rule, is we also have to collect their bank account number and their banking institutions. The little old rule only required them to give us the amount of wires that came into the transaction or the amount of money. The new rule requires us to know the amount of money and actually where it came from. So it's just another layer of trying to squash, the fraudsters who are out there trying to watch dirty money. So lenders have always had this program in place. Lenders have always done this kind of due diligence. The government just felt like they weren't touching enough. There was enough loopholes to figure out how to get around it, go to a hard money lender, being coercion with a seller to do that kind of thing. So that's what they're trying to cover, is all these other ways to get financed that aren't already under an umbrella of a program to watch out for that money laundering that takes place out there. The process doesn't take that long to do as long as the buyers and sellers provide the information that's required. Every settlement agent that I know of, as well as the title companies, are not allowing your files to get to closing and reporting without having that upfront information in their file. As we all know, we lose a buyer and we lose a seller once we close the transaction. They're not as happy to help us once the transaction's closed. So it really should be once we're closed, we have everything that we need. Other than that, the things I would tell your buyers and sellers that's come up in the last week, we've had lots of questions and lots of concerns, is there's a multitude of ways to collect that information. Most people are using some kind of portal because that keeps their information safe. Your buyers and sellers will log into a portal. They'll use a username and password. They'll put in all their private information. That portal will then get uploaded to the escrow or the title company's portal. And then we'll be able to report directly from there to the IRS. So nothing's leaving and going outside into the web or by paper where private information can get, misplaced, taken, or what have you. We can help by doing paper reporting if you'd like. Most escrows are not doing it that way either, because that means they have to then go and key all that information in themselves. But you can do it a multitude of ways. So that is FinCEN somewhat in a nutshell. And again, it really hasn't changed much as far as what we're asking for. We're just going to ask for FinCEN reporting on a lot more transactions than we used to ask for it on, because it's a much broader scale.
Okay, so I guess thank you for that info. I guess as a buyer's agent who is working with an entity buyer, what would you suggest them should they talk about this up front, or should we wait till we get escrow open? Like when do you think this should be introduced as the buyer's agent? And then I guess part two would be, if the buyer's like, why are we, what is all this stuff? I don't want to do it. What's going to be the outcome there?
Yeah, there's really no way around it. FinCEN's pretty clear that if the transaction qualifies as a FinCEN reportable transaction, then you really can't do the transaction without having the buyer participate. So in essence, the reporting must happen, or on our end at least, transactions can't close without having that reporting done. The penalty to the settlement agent, and there's a waterfall of people who are responsible. So it starts with your settlement agent. It's a very, very vast rule. It starts with the settlement agent or someone who prepares a settlement statement. The third person in line is anybody who draws a deed. So if you draw a deed, you're a company, not necessarily individual people. But if you're a company and you draw a deed and cause to get it recorded, you fall in the waterfall of the requirement for the new rule. The title company is number 4 in line this time instead of number 1. And then it goes further down to attorneys are going to have to do this, as well as document signing companies. So everyone is going to be touched by the rule. It's really just a way. The best way you can explain it to them is that, I guess, what I'm doing is just that we're just trying to keep properties honest, money not getting laundered improperly, and keep to be frank, terrorists and cartels out of the mix of, taking properties away from us. So it's challenging. Some buyers totally get it. Some buyers don't. Some want to go investigate it themselves. I had one the other day that just reported himself. I'm like, well, you can't actually really do it that way.
Yeah.
So there's a lot of information out there. But again, San Diego, we kind of already have this in place. So it's not a new rule to us. The only way to get around it is to not purchase your entity. There's, so that would be up to them to determine if they wanted to do it that way. There could be tax implications if you buy it as an individual, then transfer it to, say, an entity of some sort. So they would need to consult with their tax people, make sure there's nothing there. But that is the only way around it, is to buy as an individual.
Carrie, I had a question the other day from an agent that is traditionally comes up with seven-day closes or 14-day closes. Will this hold up any transactions pending that the communication is there up front?
It can. So that's a great question, Michelle. It can, because it really depends on the buyers and sellers to get the information back to the reporting party as fast as possible. On a 7-day close, if you're going to enter a transaction where you want a 7-day close and you have a buyer who's going to be an entity, you probably need to be talking about this rule to them ahead of time and let them know what they're going to have to be doing from the jump start. Also, if that escrow settlement agent is going to want to assign away the designation to a title company, then that further may cause it to be more delayed, because then we need to enter into an agreement with that escrow company regarding the designation and what our responsibilities are versus theirs. Then we need to collect the information from them. We reach out to the buyers and sellers. Again, they don't know who we are, so they tend to stop, reach out back to their settlement agent and our real estate agent to find out who we are before they will interface with us, which is very smart. So it could cause some delays if you have a really short close. So I would definitely be having conversations with those people at the very beginning to say, this is what this is. When you get alerted, you need to jump on it right away so it doesn't hold up the closing. Yeah.
Okay. When does I guess the notification go out in the transaction process of this reporting requirement? Is this an opening escrow doc that comes through saying, hey, we need all this information, fill out this form, or is this later on?
Yeah, for me, I can speak from two fronts. From me on the escrow, our escrow division, yes, as soon as we get a transaction opened, we identify whether it's a FinCEN and then start the process of getting that stuff out to them. Rather have the information come to me and then they change their mind and go, oh, wait, I'm going to purchase in this other LLC. Instead, most of the information about the signers and beneficial owners are going to be the same. It's just be the name that's going to change. And we would have collected the meat of the information right away. So we're doing it from the very get-go. I know some independents out there. I've talked to a ton of people in the last week. Some independents are using their own platforms. They have their own portals. They're doing it themselves. They're reporting themselves, which is probably the fastest, most streamlined way to do it. And some just don't have the manpower to do that. So then they're designating us. But I see there's a delay because we have to send out the form to them. They have to complete it, get it back to us. Then we get it to our team that's part of title, which is separate from our escrow team. Then they reach out by sending emails and then send the portals out. So the delay is a little bit more when they decide to designate out. So you might want to just be asking your escrows, are you guys doing this yourself? Are you guys going to have to designate it out to your title partner? Just so you kind of have an idea of where things are coming from and what the lag might be. But we're doing it from the very beginning, as a lot of independent escrows are doing as well.
Now, is there any sort of red flag that can come up that could prevent the transaction from closing based on the reporting of by the entity buyer?
Great question. All we do is report it. Nothing all we are supposed to do is be the collector of the data, make sure we've collected all the data that we need. Once the transaction has closed, then we report that to FinCEN. They take that information and they do with it what they wish. So we're not getting them to review it first and then see, oh, this LLC is on a target list somewhere. That's not what is happening currently. So all we're doing is collecting all the information for them, closing the transaction, reporting it to FinCEN, and then they do whatever their magic they do behind the scenes.
And if we have a entity buyer, purchasing, and they say, I don't want to do this purchase because of this reporting, do you consider that a red flag?
Could ask them some questions. Yeah. I mean, you probably have other red flags besides that already, but yeah, you might explore reasons why they don't want to do it. You have to be really cautious. I mean, I'm a notary as well, and I see some fancy IDs, and you just got to be cautious in what you say. You don't want to accuse anybody of anything, but you'll see more red flags in a transaction when it's suspicious than just that. There'll be other things that money will come from a weird place, or they might have one person sign your contract, but then want someone else to sign something else. Like you'll see a multitude of things when that occurs.
All right. Any other questions? You can toss them in the chat or raise your hand and I'll unmute you. But I think it sounds pretty straightforward. I guess, us as the agents on the buyer side, essentially we are on the front line here. These are probably some questions to ask as you get going, but it does sound like, your trusted title and escrow officer is going to be handling the bulk of this and just making sure that comes through. Is there anything we should be doing as agents, or just kind of shoving it over to you and advising the buyers to give all the information they can?
Yeah, I just think as the agent, I'll speak to one other thing in a second, but as agents, they trust you. You guys have been showing them homes, you've been garnering relationships with them. So you are really the trusted party in the transaction. So just starting the conversation with them so they know it's coming, maybe going over that FinCEN form when you're having them sign the contract instead of just like, here's your DocuSign, sign here, because we all know they don't all read all that. They're just so excited about buying. Like, this is the price, this is the address, perfect, I'm good. and they don't always get to the nitty gritty of those documents. So just like when wire fraud came out, everybody did a really good job at like bringing that to the forefront of their minds. I think we just need to bring it to the forefront when we have a buyer that's an entity of some sort, so they understand that this is going to be a conversation that's going to be had by other parties in the transaction. So they're just aware of it because they trust you first. So it should start with you. The rule did also expand on two things, and that is, I don't know how many of you guys sell commercial mixed use properties, but the rule is for residential properties, but they have decided that a commercial mixed use where there might be residential with the commercial, it is potentially reportable as well. So we're getting clarification on that every day. Seems to get a little more narrowed down. As of Friday, mixed use would be this. Say you're buying a business building on the bottom floor, and on the top 2 floors, you have apartments. If you have 4 or less apartments, that would be reportable because 1 to 4 units mixed with your commercial. But if you have 5 or more units, non-reportable. So just keep that in mind. At a commercial residential mixed property would potentially be reportable. So you want to reach out to whoever you partner with. I'm always here. I mean, I'm not saying I will only answer your questions if you're here. I'm helpful to whoever has questions. Reach out to people you know to see if that type of transaction might be reportable. Also, your vacant land that's going to be used for residential purposes will be reportable. It was not reportable before, but it is now reportable. So we will be reaching out to those buyers and asking them directly, are you intending to use this property for residential purposes? If they answer back yes, we will have to report it. So yeah, so those two things are new to the qualifications of what is reportable.
Okay.
Okay.
One question came in. Does it include cash foreclosure auction? It's more about the buyer, right? Not the well, I guess it does depend on the property, but I don't think the foreclosure part of it makes a difference.
It follows the buyer. You're absolutely right. It follows the buyer. So it's all about, is my buyer an entity, and is that buyer purchasing a residential piece of property? And then it goes from there. It has nothing to do with who's selling it. So if it's being sold, if it's a HUD property, we're reporting it. If it was sold on foreclosure, we're reporting it. If your buyer happens to be a bank or a credit union, foreclosure company, they might be exempt because there's a ton of exemptions for buyers under those types of, things. But our normal run-of-the-mill buyers, corporation, general partnership, your local LLC, your trust, those are all going to be potentially reportable.
Okay.
Okay.
Cool. I think that's it. Austin, yes, we always save these. They're in the back office. Someone's asking about UWM track fees versus Tycor title fees. We could probably do that in a phone call. Because that's I guess that's a little difficult to figure that one out. But well, live, I guess. It's easy to figure out, but we'd have to get the scenario. So I think that's about it. If nobody else has any questions. We do have Carrie's phone number in the chat if you need to call her with any other questions. And then obviously Michelle is always available.
Yes.
We like to throw lots of questions at Michelle. I like to give her the hard stuff.
I know. I just saw another question come in, another subject. Oh, that already came through. I just want to reiterate for all of you agents out there, we're here as a resource for you. I think, like Carrie said, it's ever evolving with the FinCEN. There's always little changes that are happening here and there, but we're here as a resource. On the title side of things, guys, when it comes to farming, I can't stress enough how creative we can get these days. So reach out, let me tell me what your situation is, and I can show you kind of what we can do to help you increase your inventory.
Yeah, and I'd like to throw out also the Tycor One app is really good. I use that all the time for calculations. Andrew went over, a site he uses for calculations, but I really like that one.
Yes.
So if you need access to that, I think they have to go through you, or they can just get it on the store.
Yeah, it text me and I can get you set up right away. Just my phone number is in the 7 right there, and the number 760-518-53. 383, and I'll get you all set up.
Yeah, that one's got multiple calculators in it. I use it for calculating payments all the time, but it does have seller net sheets in there and all that other stuff that you're usually kind of, asking questions about. That app has got a ton of calculators in it. So
Yeah, and the NetSheet app they've added the FinCEN button in there too. So
naturally.
taking it another level.
Yeah.
Right.
All right.
All right.
Well, I
Well, thanks
appreciate
for
you coming
having us.
on. It's good to see you again. And we'll have back on. We can talk about farming and maybe we'll do a little session on that. So,
Love it. Thanks, guys.
all right. Sounds
Have a
good.
wonderful day.
All right. Have a
Bye-bye.
good day. We'll see you, everybody.